For about a decade, Bitcoin's journey was mostly shaped by early believers and everyday investors, but that's changing. A new chapter is starting, and this one isn't being written by coders in chat rooms, but by some of the largest financial players in the world, the ones managing trillions of dollars. The game is evolving, and the old way of thinking about Bitcoin might not be enough anymore. The big question has changed from if the top 1% will adopt Bitcoin to how they're doing it, and what that means for the rest of us. This isn't about a single price jump or a quick trade. It's about a deep structural shift happening in finance right now. Bitcoin has started to transition from a speculative bet to a strategic asset for the financial elite. This major change is fueled by three key developments that came together in 2025. Clearer rules from regulators, a new set of professional-grade tools for investors, and the rise of real-world uses for the technology. In this video, we're going to break down each of these drivers. We'll show you exactly what the world's most influential investors are doing and what that could mean for your own financial plans. We'll connect the dots from complex regulatory news to your portfolio and give you the new playbook for this new era. For years, the main thing holding back big institutions wasn't the tech. It was uncertainty. Giant pools of money, like pension funds, have a duty to be careful. They can't just jump into an asset that exists in a regulatory gray area. 2025 was the year the key regulators started giving the green light, creating a compliant path for trillions of dollars to potentially enter the space. A huge development was the global spread of spot Bitcoin exchange-traded products, ETPs. After being approved in the US, these products became the bridge between digital assets and traditional finance. For the first time, a wealth advisor could get their clients into Bitcoin using the same regulated products they use for stocks. While these regulated ETFs saw strong initial demand, the market has also seen recent volatility and outflows, showing that this institutional adoption is a process, not a single event. But it wasn't just the US. The European Union's comprehensive Markets in Crypto Assets (MiCA) framework became fully applicable across all 27 member states at the end of 2024. This created a single harmonized set of rules, allowing a crypto company licensed in one country to operate across the entire EU, a concept known as passporting. This move simplified things dramatically and sparked competition among countries like France and Germany to attract crypto innovation. Meanwhile, financial hubs in Asia have also been making moves to become centers for digital assets. For instance, Hong Kong has been developing a clear framework for stablecoins and spot crypto ETFs to legitimize the asset class in the region. In the US, the conversation has been shifting. In July 2025, Congress passed the Genius Act, which created the first federal framework for stablecoins. This was a crucial step, as stablecoins act as the plumbing for the entire digital asset economy. A clearer tone from regulators has given major banks the confidence to start seriously planning for crypto custody and trading services. What all this means is simple. The career risk of investing in Bitcoin has been significantly reduced. A decade ago, a portfolio manager could get fired for buying Bitcoin. In this new era, they might soon need to justify why they haven't. The top 1% aren't just testing the waters anymore. They're entering a regulated environment, and the infrastructure is being built to support them. With a clearer regulatory picture, Wall Street started building the tools for widespread adoption. The story of 2025 is about institutions moving from watching on the sidelines to actively participating, using a new suite of sophisticated financial products. The most obvious sign of this is the activity in Bitcoin ETFs. We can see who is buying thanks to public 13F filings from large investment firms. The data from 2025 is revealing. Professional investors now account for a significant portion of the assets in US Bitcoin ETFs. But the more telling detail is that the average allocation from these institutions often remains below 1%. This suggests these are careful initial positions, not a speculative frenzy. It looks like the beginning of a long-term strategic shift with plenty of room to grow. Beyond ETFs, the world's largest banks are building pathways for their wealthiest clients. In 2025, major firms like Morgan Stanley and JP Morgan have reportedly been preparing to offer clients access to Bitcoin. Even with some public skepticism, leaders like JP Morgan's CEO have admitted their duty is to provide clients with the assets they demand, a clear signal of where the smart money is headed. Corporate treasuries have also become a new source of demand. Following the path laid out by MicroStrategy, a growing number of public companies now hold Bitcoin on their balance sheets as a reserve asset. By late 2025, it's estimated that public and private companies hold over 1 million BTC, representing over 5% of the total supply, effectively taking it off the market for long-term holding. This isn't just a trade, it's a strategic move to hedge against the debasement of traditional currencies. Some analysts are calling this the S-curve of adoption. They project that the first phase, from 2025 to 2027, will involve the integration of Bitcoin ETFs into retirement accounts like 401ks and pension plans. According to one projection, this could create a scenario where an estimated $3 trillion in institutional demand competes for just $77 billion in newly mined Bitcoin over the next 6 years. A potential 40-to-1 supply-demand imbalance. We're covering a lot of ground here, and it all points to a fundamental change in finance. To help you stay on top of it, we put together a free weekly intelligence report that breaks down these complex trends into clear, actionable insights. It covers institutional moves, regulatory updates, and on-chain data you won't find elsewhere. The link is in the description below. Sign up, it's free, and it's the best way to keep up with this fast-moving story. For years, Bitcoin's main appeal was as digital gold, a store of value. That narrative is still strong, but in 2025, Bitcoin's utility expanded into real-world applications that are now attracting serious institutional capital. The top 1% aren't just buying an asset, they're investing in new financial infrastructure. One of the most explosive use cases is the stablecoin ecosystem. These are digital tokens pegged to currencies like the US dollar, and they've become the payment rails of the crypto world. In 2025, their growth in transaction volume has been undeniable, rivaling traditional payment giants in certain areas. This matters for Bitcoin because this massive liquid financial layer often uses Bitcoin as its ultimate reserve asset and collateral. The second major use case is the tokenization of real-world assets, or RWAs. This is the process of creating a digital token that represents a real-world asset, like a piece of a building, a work of art, or a stake in a private fund. In 2025, the RWA market has grown significantly, expanding from around $8 billion to over $30 billion. This growth is being driven by institutions, with private credit and US Treasuries leading the way. Giants like BlackRock and Fidelity are all involved in tokenization projects. A report from Boston Consulting Group and Ripple even projects the market for tokenized assets could reach nearly $19 trillion by 2033. As this market grows, it needs a neutral, secure settlement asset to act as its foundation, and Bitcoin is a prime candidate. Finally, we're seeing Bitcoin's integration into the broader financial world. For years, one of Bitcoin's selling points was its low correlation to stocks. However, in 2025, the correlation between Bitcoin and the S&P 500 has risen, with some reports showing it hitting around 0.5. While this might seem like a negative, it's actually a sign of maturity. It shows that big investors are now treating Bitcoin as part of the same global risk landscape as stocks. It's no longer a fringe asset, it's becoming a component in a diversified global portfolio. So what does all this, regulation, new tools, and real-world use, mean for your financial strategy? The big takeaway is that the game has changed. The era of meme-fueled bull runs driven by a get-rich-quick mindset is giving way to an institution-led market defined by a preserve and grow wealth philosophy. For the individual investor, this calls for a new way of thinking. The top 1% are not gambling. They are making strategic, long-term allocations. They use a concept called asymmetric upside. This means they put a small percentage of their portfolio, maybe 1 to 5%, into an asset like Bitcoin. If the investment fails, the portfolio only takes a small, manageable hit. But if Bitcoin achieves its potential, that small allocation can have a huge positive impact on the portfolio's overall performance. It's a calculated, risk-managed bet. For a beginner, the path is now clearer than ever. The institutional toolkit is now your toolkit. Investing through a regulated spot Bitcoin ETF from a major provider like BlackRock or Fidelity gives you direct exposure in a familiar and secure way. The strategy here is simple. Dollar cost averaging a small, fixed percentage of your portfolio over a long time horizon. You're essentially mirroring the institutional approach, patient and strategic. For the intermediate investor, the game is about watching the signals the institutions are watching. Instead of chasing short-term price charts, focus on the data that reflects real adoption. This includes ETF flows. Don't just watch Bitcoin's price, watch the net inflows and outflows of the major ETFs. Consistent inflows, especially when prices are flat or down, are a powerful sign of sustained institutional demand. 13F filings. Every quarter, check the 13F filings to see which big funds and asset managers are buying and how much. It's a direct look into the playbook of the pros. On-chain metrics. Look beyond price to metrics like the amount of Bitcoin held on exchanges versus in private wallets. A steady drop in exchange balances suggests a move to long-term holding, which reduces the available supply. The key is to start thinking like a portfolio manager, not a speculator. The institutions entering this market have a time horizon of years, not days. They aren't rattled by short-term price swings. In fact, data shows that during price dips, when retail investors might be selling, institutional buyers have often used these moments as buying opportunities to build their long-term positions. They are playing a different game, and if you want to succeed in this new chapter, you have to learn their rules. The story of Bitcoin in 2025 is clear. The landscape is changing. For years, a massive amount of institutional money was waiting on the sidelines. Now, the regulatory revolution is providing legal certainty. The new professional toolkit is providing access, and emerging real-world uses are providing the fundamental justification. This is no longer a niche asset for tech geeks. It is a maturing asset class being woven into the fabric of the global financial system by the world's biggest players. We're seeing corporations add it to their balance sheets, major banks prepare to offer it to their clients, and a multi-trillion-dollar tokenization market starting to build on its foundation. The narrative is shifting from short-term speculation to long-term allocation. The top 1% aren't buying Bitcoin because they think it will double next week. They are buying it because they believe it has a strategic role to play in portfolios for the next decade and beyond. They see the asymmetric opportunity and the profound supply and demand dynamics that are taking shape. This new chapter isn't about hype, it's about infrastructure. It's not about quick profits, it's about strategic positioning. The game has changed. The only question is, will your strategy change with it? Thanks for watching. If you found this analysis valuable, subscribe to the channel and hit the notification bell. We release in-depth research like this every week to help you navigate the evolving world of digital assets. And don't forget to check out our free intelligence report linked in the description. It's your essential guide to staying ahead in Bitcoin's next chapter.